Hi, I was asked to comment today on a very important, what I was told is a record that Dow Jones Industrial Average has hit. So I asked, now that you're asking me to comment, at least tell me which record has Dow hit. It keeps hitting so many records from time to time. So the person said that it is at the same break-even point at which it was at the beginning of the year. So I said, well, that shows that the year has been a tumultuous one. It's been a year without conviction, and naturally that's what is being reflected in the performance of the stock indices. So I was told, no, there's a very important distinction, an important record that Dow has hit today. It is the 21st time in the year that the Dow has returned back to its mean point, or to the point of no return, to the point where one can say it's a simple break-even point for the Dow Jones Industrial Average. Well, if that is the case, I asked, how many times before has this record ever been neared or ever beaten? I was told never before. This is the 21st time it has happened in 2015. In 1934 and 1969, Dow had neared the break-even point 20 times. This is the first time it has crossed the barrier of 20 times. It's the 21st time that Dow has neared the break-even point for the year, but is still neither in the green nor in the red. Now wait a minute, what difference does it make to an investor? I did explain in the beginning of the year that this is going to be a rather difficult year for stocks. And I did mention that for quite some time during the year, the Dow will go nowhere. In fact, in my many presentations, I kept saying, don't get caught away, don't get into the spiral of imagining things. Even though the Greek referendum was no, you found that the markets fell down, but then they immediately came back because there was a compromise situation again. These are no things. This is mainly noise. Even this barometer that we are talking about is only noise in the whole equation. It does not help you as an investor make a great decision as to where the Dow Jones Industrial Average is headed from here. If you have to look at my next presentation, I will tell you where we are going to do and what we are going to do for the next 4 or 5 months of this year that are remaining in 2015. But for now, enjoy the ride. I think it's going to be a negative ride. And for the next fortnight, I'm quite sure that most global indices are headed much lower. The Dow Jones, I think, is heading towards 17,000. This time it is going to be definitely in the red for 2015 before it catches speed back again. The London FTSE around 65-70, I think, is headed towards 6250 within the next fortnight. Most global indices are going to follow suit. Even the Mumbai Stock Index, which has been on a roll for quite some time, I think it's headed towards 26,000 levels within the next fortnight. The reason? Earnings are very disappointing for this year. The second largest economy in the world, China, is slowing down quite dramatically, and there is really no conviction in the minds of investors. Greece is one day done, another day it's not done. One day it's a part of the Eurozone, one day it is not. This is not the environment in which investors find great opportunities to remain in the market. Now gold has been falling for quite some time. It's at about $1,077 a troy ounce. And a famous fund manager, hedge fund manager, says that he would not be surprised if Dow falls to $1,000 a troy ounce very shortly. So what? I mean, if let us say the gold was at about $1,000 a troy ounce 2 months back, and it had gone up to 1,100, anybody in the world can just get up and say gold is headed towards 1,200 or 1,300. It's very easy to keep saying or remaining in the same direction in which a particular commodity or a stock is at a point of time, but it is extremely difficult to figure out the turn of events, which is what I've been trying to do. And if you have followed my many presentations, I have mentioned time and again that the global stock indices, but for some relief rallies, are headed much lower, and this is exactly what is happening. It's going to continue for the next fortnight. Gold, okay, headed lower for some more time, but if you are talking of major turns and major twists in global stock indices, in commodity indices, then do follow my future presentations. I have some further predictions to make for the rest of this year, which I feel are going to be very handy for the investor to come. Now, a very interesting spirited talk by an Indian MP in the Oxford Union debate, saying that Britain owes reparations to India for the colonial rule of over 200 years. Well, I think a great speech, but clearly the point that was missing is that this has also led to a lot of corruption. The feeling of insecurity which colonial rule created within India really has led to a lot of a great amount of corruption, and believe me, I think corruption is one of the major reasons why India has not lived up to its true potential. By now it would have been the fastest growing economy, also the largest economy in the world, and it is only because of these factors that it has been left behind. So colonial rule has really had a deep impact on an economy of a country. And if that is what I feel, if that is what the Indian MP speaking at the Oxford Union feels, then there is no use talking about just some moral reparations. Then it has to be quantified. If you feel that the GDP of India fell from 24% to 4% in the 200 years of the colonial rule, if there was a monetary loss, then what's the shame in asking for a monetary reparation? I don't see it why one should stop at that. So it's a half-baked argument to say that yes, there is a moral reparation, but then just don't go further from there. Similarly, I believe that most of the analysis in the world stock markets is half-baked. If you cannot point out a year in which there is so much of contradictions, there is so much of downside from time to time, how the hell is an investor going to make money? If you are at the same point at which you were as on January 1, what is the net profitability of an investor? In that time, a person could have remained in a certificate of deposit in bank, risk-free, and earn a nice fixed rate of return. If you would have been better off then. Now, where we go from here is another story which I will point out in my future presentations, but do stay tuned, and do not forget the fact that I'm expecting more selling over the next fortnight. So if you have positions in stock markets and commodity markets, then do tune your positions accordingly in this spirit. Take care. Happy investing. Bye-bye.